Hi, it's Joe Mazumdar, editor analyst of Exploration Insights at the pre-PDAC edition of the Metals Investment Forum in Toronto. And with me right now, I've got the chairman of Generation Mining, Kerry Knoll. Kerry, how's it going?
Good, great, thanks.
I was just recently at the Marathon Palladium-Copper project, which is really proximal to the Marathon town in Northern Ontario. And I must say I was very impressed by the people working on the development project, which is at the feasibility stage, but really at the permitting stage. You've just finished your public hearings.
Yep.
And so, a lot of retail obviously do not like development projects right now. They're all scared of capital escalation. How does a microcap company fund this sort of project? So how do you deal with that, and in terms of the market, and how do you de-risk that?
Well, first of all, on the funding side of things, you go through it step by step. So the first step we did was to raise $240 million through a stream from Wheaton Precious Metals.
And that was just late last year.
That was late last year, and we've already received 20 million of that. We're getting
Which is
another 20
rare
million.
that people, they give you anything up front.
That's right. Well, we needed it because we didn't want to sell shares to do our detailed engineering. And then the next step is the banks. So we put notes out to several of the banks and got indications of interest back for about $1 billion US.
Which is more than you need.
Which is, well, we're seeking 400 million US.
But is that over and above the 200 that you got?
No, that's over and above the 240 million from Wheaton. So that would be in Canadian dollars, roughly $500 million, which would get us very close to the amount we need to build the mine. We will need some more, and the banks are going to require us to have some skin in the game, so some equity. But we're trying to do part of that through some very creative deals with some of the streaming companies and the smelters who are interested in our concentrate. So we're doing all of those things right now. That's all happening through the summer and fall of this year. And simultaneous to that, we're doing our environmental approvals, followed by permitting. And that's, again, something that we expect to happen in calendar 2022. And with a little bit of luck, we'll be starting to clear the land in February of 2023.
And I must say, well, we saw the market's reaction was actually positive because, if we go a little bit backwards, Sibanye had this back-in right into the project because you bought the project from them. They didn't back in, which the market thought as a negative, thinking that there was something wrong with the project, and potentially that, the financing risk for you increases. But then several months later, you get this stream from Wheaton Precious whose cost of capital was like 4 or 5%, which is ridiculous for a stream, which tends to be over 15%. So that was a very positive for the market. And so I guess with the financing risk that you're trying to mitigate, hopefully that'll have a positive impact. But that's really pending the permit. That's like
correct.
The biggest.
And all these financings are going to be pending a permit. Nobody's going to give you money until you've got the right to build. But we've been checking all the boxes on the permits. Certainly the Ontario government, which just got reelected, has been very, very positive on our whole permitting effort. They've allowed us to apply for the permits even before the environmental assessment is approved, which is not always the case. And so we're driving on, and we're expecting to get the right to go ahead and build on our schedule. And that's the schedule we really had for the last 2 years. We've accomplished all of this in less than 3 years of owning the project.
So maybe you can give us a little bit more detail on your last press release about the Export Development Bank of Canada, which I've never heard of. And I don't know if they've ever been involved with a mining project or even a development project. So give us a little bit of background on why that's important.
So Export Development Corporation is a crown corporation that is actively engaged in financing companies that will export their products, and they exist because the Canada. One of the ways a country functions is by having exports, and that brings money into the country. So they're there to help with that. And normally on a project our size, they indicated to us 100 million would be sort of their top end. But because we are a critical mineral, and we're listed, palladium and copper and platinum are all listed on the Canadian critical mineral list, they have come around and said they'll increase that to 200 million. So that's our kind of lead order, but they won't do 100% of the financing. They want to see some other banks in the syndicate, and we've got indications from a bunch of them, but that's certainly the biggest one. And the other, we have a few more around $100 million, and we're then engaging them and working to put a syndicate together, and then do the final due diligence, and then take it to the next stage.
So I guess if we had to summarize, your next big catalyst would be permitting, nailing down how you structure the financing to build the project. And right now, and you're also sitting on a working capital position that'll let you generate all of this catalyst before you have to ultimately break ground.
That's correct. We're getting another 20 million from Wheaton in August, and that'll give us the money to get through to the end, with the one exception. The amounts that the equipment suppliers want as down payments have started to go up. So we may have to raise a little bit of money to get some down payments on equipment, because the equipment lead times can be anywhere from a year to a year and a half, and we need to get those down payments in. And we estimated 5% in our feasibility study, and now some of them are wanting 10 and 15% down. So we're going to have to, we may have to raise a little money to do that.
So it's not a cost impact in terms of the cost of the equipment's gone up. It's just that how much they want to hold in terms of.
And some of the equipment has gone up, but not as much as you're hearing at some of the other mining operations. I think some of the other mining operations are, it's more than just equipment inflation that's gone up. There's a bunch of other factors. So with us, it's changes of scope of work, et cetera. So we're trying to get pin down a number on what the inflation is, but inflation, of course, is a moving target. And so until we actually get a down payment down, we won't have our numbers firm.
And one thing on my site visit that got my attention is that we talk about Magino, we talk about Hard Rock, and also the Cote Lake projects all being developed right now at the same time. Some of them having issues with scope changes, cost escalation, and things like that. But interestingly, they're being built now, and so by the time you get going, what I didn't realize is their labor will be going down, and such that you might be able to pick up the same construction availability in terms of labor around when you start up.
Yeah, that's a real advantage, because will be the only mine under construction in Ontario at that time. Yeah. And the biggest shortage that they're seeing in terms of labor is the trades. Yeah. The plumbers, the electricians, the welders, et cetera. And they will be coming off of these other projects, so that'll be a big benefit for us.
Okay. Well, that's anybody going to university and getting that arts degree, maybe, get a trade. All right. Well, thank you very much, Kerry. It's Joe Mazumdar, editor-analyst with Exploration Insights at the pre-PDAC edition of the Metals Investment Forum, talking about generation mining. Thank you very much for joining us.